If you're watching this in January thinking, I should have done something in December, don't worry. You're not alone. Here's the good news. Most financial decisions are fixable, not fatal. So let's talk about what you can still do.
This video is for educational purposes only. Always consult professionals before making legal, tax, and investment decisions. So here's what happens every year. December rolls around and your good intentions collide with deadlines, family obligations, and year-end fatigue. You know what you should do, you just run out of time and energy.
And then January hits, you get back to work, and life starts all over again, and all the stuff you neglected at the end of December hits again. And then the question hits you again, did I miss my chance? Well, for most things, the answer is no. What matters isn't what you didn't do, it's really what you do next.
So let's reframe this. January isn't a reset month, it's a repair month. Financial planning doesn't operate on a calendar the way most people think. Some windows do close on December 31st, but way more stay open than you'd expect.
And the real risk isn't missing December. The real risk is ignoring January. So let's talk about what you can still fix.
The first fix is you revisit tax decisions you rushed or completely avoided.
Good tax planning isn't something you cram into the last 2 weeks of December. It's a year-round process. In fact, we believe it's a lifelong process. But most people don't think about taxes until they get their taxes from their tax man in April, and they forget about them until December 28th, or some of them just forget about it entirely.
January is when reality replaces assumptions. So you've got your year-end statements. You can actually see what happened. Maybe not what you had hoped would happen, but even though the calendar flipped, your financial planning needs continue.
Now, some things are locked in. If you wanted to do a Roth conversion last year, that window closed on December 31st. That's a calendar year thing. But the other things, most things are still wide open. You could still contribute to an IRA for last year all the way up until April 15th or whenever you file your taxes. Backdoor Roth IRA strategies, they're still on the table.
And here's something most people miss. Taxes don't live in isolation. They're connected to your investments, to your cash flow, and to your life changes. If you're only thinking about taxes 1 year at a time and only in April, you're leaving a lot of money on the table.
Yeah, that's what we think. I mean, again, we talk about lowering your lifetime income tax bill, which is an ever ongoing process. Let's talk about that. The goal isn't to lower this year's tax bill. We find that most accountants' goal is to make sure you pay as little tax as you can this year. That's sort of opposite the way we think. The goal is to lower your and your family's lifetime income tax bill. And that kind of thinking doesn't just stop because December ended.
The second fix, reassess your cash flow for the year ahead.
In retirement, think about it. You live on income, not assets. That's something a lot of people don't really appreciate until you get to retirement or are into retirement.
When you're working, your cash flow is pretty straightforward. Paycheck comes in, bills go out. But when you're transitioning to retirement, or maybe you're already there, the cash flow picture is far more complex. Where is the income coming from? When do you need it? And how does it affect your taxes?
So think about it. January really is a great time to map out the next couple of years ahead. Not the next quarter, not this year, but the next few years. It's not just how much do I have, but how much do I need and when am I going to need it? And that kind of planning takes some of the market risk out of the equation because you're not scrambling to sell investments in a down market. We haven't seen a down market in a while, but we will someday see a prolonged down market.
You got to be ready for it.
You got to be ready for it. So we don't want you making crazy adjustments because the market's down. We know the market's going to go down someday. Why don't we start preparing for it now? We often say the way you get ready for the next recession is at the beginning of the last recession.
If this kind of thinking resonates with you, the stuff nobody else talks about, hit subscribe. We put out new videos each and every week.
Fix number 3, clean up the decisions that no longer fit.
What made sense once doesn't make sense forever. Financial decisions outlive their usefulness all the time. Old accounts, old strategies, old structures. People hold on to them out of habit or sometimes emotion.
Here's something that we hear a lot, more often than you might think. And let's say Grandpa Willie worked for IBM for 40 years and He leaves the stock to the grandmother or the family, the kids and grandkids, and they all say, I can't sell it. Grandpa worked there the whole life. That company gave us livelihood, our great lifestyle. It's been good to us. Now, what if Grandpa worked for Kodak instead of IBM or Enron? That emotional attachment would have been a financial disaster for the family. So I'll tell you a story. Let me tell you a story about a client of mine. I worked for a paper company many years ago, and we had been talking, and the fellow's mortgage, he had $80,000 left on it. He wanted to retire in the next few years. And I said, Ralph, how much do you have in that paper stock? And he said, about $80,000. I said, what's your mortgage? He said, about $80,000. I said, why don't we sell the stock you know nothing about? Because he didn't. I asked him. And we pay off your mortgage. And he thought, what a great idea. And he was happy as a clam. A couple years later, happened to be reading the Wall Street Journal. Lo and behold, that company went out of business. They went bankrupt. So think about that. He turned an $80,000, mistake into an $80,000 paying off his mortgage that would have been a huge mistake had it gone to zero. Yeah. So you just never know. These things that sit around, sometimes they're valuable and sometimes they're not.
Here's a question we ask clients all the time. If you had $5 million today and I told you to put 80% of it into just one stock, you'd walk out the door before I finish the sentence. And yet, we see portfolios like that all the time. Concentrated positions that made sense 20 years ago, but don't make sense anymore.
Yeah, and there's so much risk, but we see it again and again and again. I work for this company, I know what's going on, but do you really know what's going on? I mean, the people at Enron didn't. Think about it. January is a good time to ask yourself, would I still make this decision if I were starting today? If the answer is no, it might be time to simplify. Make it easier on yourself and your family.
Fix number 4 is reconnect your planning to life changes, not just to the markets.
Every January, the financial media rolls out the same thing. Market outlook, economic forecast, top 10 predictions for the new year. And look, that stuff isn't useless, but it's not what drives your plan. We get questions at the beginning of every year that says, JP Morgan or Morgan Stanley, they said this, what do you think? And it's not something you want to base your entire livelihood and your life's earnings on.
What matters more is what's happening in your life. Did your health change? Did your work situation change? Are there family conversations you've been putting off?
I have a client right now who's in pretty bad health. And for years, every few months when I talk to her, I ask her about her estate planning. She wanted to change. And she was afraid to disinherit one or two people. So what did she do? What do you think she did? She kept postponing it.
Kick the can?
Yeah. And now that she's not well, the conversation we have to have is, I think, a lot harder than it had to be. In fact, we made the decision to disinherit these people. And she called me back that night and said, I feel guilty. I shouldn't have done that. And I said, but you've been talking about it for years. And I want, think about what you want to do. Isn't it more important to pass the wealth on to the people you care about most? And I think the people have the greatest impact on your life. And that could be kids. It doesn't have to be kids. Our dad always used to say, you can pick your friends, but you can't pick your relatives. Think about it. Once you're gone, nobody's going to pressure you and make you feel bad because you won't be here anymore.
These are clearly uncomfortable conversations. Retirement timing, estate clarity, who's going to play what role in your family. But once the decisions are made, once you've had those conversations, you have clarity. And clarity makes everything easier. It's always easier to modify a plan once it's in place.
Think about, use a golf analogy. There's a story about Tiger Woods in one of the U.S. Opens. It might have been 2010. He's standing over a putt, a 12-foot putt, that he's got to make to go into a playoff tomorrow, an 18-hole playoff to win the U.S. Open. And, he says he's standing over the putt, and he looks back at his caddy, and he said, I think it's a right edge putt. I think it's going to break right in the hole. And the caddy said, that's exactly what I read. I mean, is it easier to step up and make that putt when you've got your trusted advisor, your caddy, standing behind you with the same, saying to putt it the same way? So think about it. Thoughtful planning is forgiving. It's not punitive. If you miss December, doesn't mean you missed the opportunity. It just means January is your catch-up month.
What matters isn't what you didn't do, it's what you do next.
Yeah, missing December doesn't mean you missed the opportunity. January is about catching up and recalibrating, not starting over. Reset.
Progress builds confidence, and confidence fuels momentum. Once you get started, once you knock out one or two things, you're much more likely to get to the finish line.
Now, don't you find that when people get going on the planning, it almost it takes over them, which I think is great. It takes over them in a good way. They say, my gosh, I never would have done this without you. It's probably like the person that gets the personal trainer and loses the 20 pounds that they've
It's so true about getting started and knocking out those first couple of things. You build momentum and the plan gets done.
If you're thinking, okay, I've got things to fix, as we all do, how do I actually get from chaos to clarity? Watch this next video. We'll show you what it looks like to move from scattered accounts, outdated documents, to a coordinated plan where a phone call solves just about any problem.
So if you'd rather just have a conversation, figure out which of these fixes applies to your specific situation and where to start, click the link below to schedule a call. No guilt, no lecture about what you should have done, just a chance to figure out what to do next. As we say, investing is the easy part. It's the coordination that makes the difference.